Hello traders, welcome back to FXCM YouTube channel. My name is David Londoño, I'm a trader and also do market analysis. Today we're going to be talking about how to properly do a back test on your strategy based on Bollinger Bands. So let's go into it. Well, back testing a strategy based on these Bollinger Bands involves different things like testing historical market data to assess the performance of your trading rules. So here is like a step-by-step guide to backtest your Bollinger Band strategies. Of course, this is not the Bible, but this is something that may help you to know how to properly do a backtesting. If you know more tips or if you know something that really help you through this, leave us that on our comments, okay? So let's start by understanding. You need to really understand what the Bollinger Bands are, right? So it consists of three lines. Of course, it's the middle band or the SMA. It typically a 20-period sample moving average. So it has the upper band and the lower band. The SMA is plus 2 standard deviations. That's the standard deviations we use. So if you want to check the indicator itself, it usually has a 20-period sample and it has multiple 2 standard deviations. That's what you see on the Bollinger Bands. They aim to measure volatility, showing when the price is overbought or oversold. So after that, you'll need to define your strategy. We have to understand that with Bollinger Bands, we have 3 different types of strategies. We can use them like mean reversion, buy when the price touches or crosses below the lower band. We have these crosses or these changes on the state of the delivery, and sell when it crosses above the upper band, when we have the other cross. With this indicator, we can see that in the change of colors, right? That's easier to watch. But we also can use this as a breakout. So buy when the price breaks above the upper band or sell when it breaks below the lower band. And also the band squeeze, but we will have just one video for that one. For now, I can tell you, like, look for periods where the bands contract or low volatility, or that indicates potentials for a breakouts, okay? So after that, we will need to select our parameters. What are those? Like time periods of moving average. 20 days is the typical, but this can vary. The standard deviations, as I was telling you, the 2 is the common, but testing other values, like for example, 1.5 or 2.5, it's also very useful, and that can give you different results. So you will need to like test those and watch which one fits you better. And maybe use other filters as well, like include indicators, volume or size, or to enhance your strategy. After that, we will need to gather the historical data. So use historical price data, like for example, open, high, low, close, and volume as well for the assets you are testing. It can either be stocks, forex, etc. And after all of these parameters, then you can do it manually or even code the back. If you're new into coding, I think we are going to do some videos about not how to code, but how to use different tools, like for example, Python libraries like pandas for data manipulation or NumPy for mathematical calculations and so on. So we can use backtesting libraries like Backtrader or Zipline to simplify the process. The other thing you can do is test these strategies according to the strategy you're using. You can also do it manually, so you can check on the data when this happened, what action will you have if you had bought or sold, and how to manage, how will you have been managed those trades. That's a lot of work if you do it manually, but even though that's something we have to do, we have to backtest our strategies, right? And finally, and eventually, we will need to evaluate the strategy. So you have to evaluate things like, for example, performance metrics, track key performance metrics such as profit and loss, of course, win rate as well, Sharpe ratio, which is the risk-adjusted returns, max drawdowns as well, that's very important, and visualize the trades, like plot the price data with Bollinger Bands and buy-sell signals to analyze the strategy visually. That's something that also helps a lot. That's a lot of information, I know, so I would like to leave this video on this part. I think we should come with this information again and go further But for now, I'll leave you also with this article on our FXCM platform. You can check this, how to use Bollinger Bands in Forex. Also useful information if you are new with this indicator, that will help you a lot. And well, that will be all for this one. I hope you have liked it and enjoyed it. And don't forget to share and subscribe. And I will see you on the next training session.